When people think about banks, they imagine buildings, vaults, and money. But the real banking system is far bigger than any single bank. It's a global network that moves trillions of dollars every day. So the question is, who really controls it? The answer is not a single person, family, or secret group. It's a system built on layers of institutions, governments, and financial rules developed over centuries. The foundation central banks at the top of most national banking systems sits a central bank. Examples include the Federal Reserve in the United States, the European Central Bank, the Bank of England, the People's Bank of China. Central banks do not operate like normal banks. They don't serve the public directly. Their main roles are to control a country's money supply, manage interest rates, keep inflation stable, act as a lender of last resort when financial crises hit. In simple terms, central banks guide the direction of a nation's financial system like a control tower for the economy. But even central banks don't act alone. They are shaped by economic laws, government policies, and global market forces. Commercial banks, the engines below central banks, are commercial banks, the ones people use every day. These banks hold savings, give loans, finance businesses, support trade and investment. They are powerful, but they operate under strict regulations set by governments and financial authorities. They must follow rules about capital reserves, risk management, consumer protection. So while they move huge amounts of money, they don't control the system freely. They operate inside a framework. Governments and laws. Governments play a major role in banking control. They create the legal systems that determine how banks can operate, what risks they can take, how customers are protected. During financial crises, governments can step in with bailouts, reforms, or emergency policies. So, political decisions strongly shape how the banking system works. Global coordination because money crosses borders. Banking is also influenced by international institutions like the International Monetary Fund (IMF), the World Bank, the Bank for International Settlements, BIS. These organizations don't control national banks directly, but they help coordinate policies, set standards, and promote financial stability. The real answer: so who really controls the banking system? It's not a single controller. It's a balance of power between central banks, commercial banks, governments, international institutions, and global markets themselves. Markets matter because investor behavior, trade flows, and economic confidence affect how banks operate. The system works because of trust. Trust in money, in institutions, and in rules. When that trust weakens, crises happen. Closing the banking system isn't ruled by one hand behind the curtain. It's a complex structure built over centuries to manage one thing humanity depends on: confidence in money. Banks move wealth. Central banks guide stability. Governments write the rules. Together, they form a system that powers the modern world, not controlled by one, but shaped by many. And that balance is what keeps the financial system alive. Don't forget to comment, like, and subscribe to Manta Education to stay updated on our latest information. Thank you.